Hey traders, a very good afternoon to you. So, which key events affect the markets? As a new trader, or perhaps you've been trading for a while, or just completely brand new, sometimes you think, what is moving these markets? Well, we've got the supply demand, which we talked about in another video, but ultimately, every now and then, you're going to get events that come out that actually are key to the valuation of that market. And let's run through a few now. So the first one and the big one is economic data. There's a calendar of data that comes out, and there's plenty of those out there. Your spread betting company will have one. There's loads out there. But basically, every single month and every single week, there's data that comes out that's reporting on the state of the economy of the country that's trading. So if we're trading the Dow, you're looking for economic data that's coming out of the US, and that's going to be a monthly interest rate announcement, Fed meeting minutes. It's going to be jobs reports. We get those on a Thursday. We also get non-farm payrolls, which is a deeper jobs report every month. We get CPI, PPI, and these are inflationary type figures and index figures. Manufacturing, some of these are kind of irrelevant unless they're really extreme and they don't really move the markets. But then some things that are very in focus, like at the moment, interest rate announcements are in focus, or how much money they're going to put into the economy, how much money they're going to print. All these kind of things are in focus depending on which country and which economy you're looking at. So it's important to look at the right data for the specific time of the cycle that we're in, the economic cycle that we're in. And you don't really need to be economists for that. You just need to see what is moving the markets. Okay, the market's moved on that date. What was it caused by? Let me just look at the mainstream media to see, okay, from now on I need to look at the jobs report number, the non-farm payroll number. I need to look at the interest rate announcements, or I need to be aware of that. So, those are things. The economic data is going to affect your indices and your currencies, anything related specifically to that country. And then we've got stocks. Now, stocks obviously have earnings coming out. They have quarterly earnings, interim reports, some sort of management news. Perhaps they've had a court case go for them or against them, or a merger, or anything like that. And they have earnings coming out every quarter to say how they've done last quarter. You get some sort of different reports coming out. So, most of the time these are scheduled, and if you're trading a specific stock, you need to just look up and go onto finviz.com or the stock website, investor relations, and just check if you're holding something overnight that there aren't earnings coming out, because the last thing you want to do is lose money because you weren't prepared for some announcements. The same with any of these things, being prepared so the risk is managed. So earnings are going to move stocks. Now, why do they move stocks? Well, basically because you've bought a stock, and the next thing is they come out and say, hey, you know what? We didn't do as well as we thought we were going to do. Next quarter might be a bit of a struggle for us. We're expecting this number and we got a little bit lower. Ultimately, that stock perception of value becomes lower in theory, and so the price of that stock is more likely to move lower. And so there's a little bit of what I call a reprice scenario. In other words, the value of that stock has changed instantly by that announcement. A very obvious one is, listen, someone's come along and said they're going to buy us out for $50 a share. It's currently trading at $38 a share. All of a sudden, the value of that stock becomes $50 a share, minus perhaps a little bit of a discount for the deal perhaps not going through. So probably you end up trading at something like 47 or 45, something like that. But ultimately, the value of that stock has changed in an instant in a reprice scenario. So then moving on to the commodities, we've got harvests and inventories. So crude and oil and gas inventories, they're telling you how much they've got in stock and all those kind of things. And again, depends on the condition of the commodity at the time. If it's really in play and it's a really key number, it's going to move it violently. If it's not in play and it's not really relevant, then perhaps there's no supply problem, perhaps there's a demand issue, or perhaps it's all very, very happy and everything supply-demand chain is working well in that specific commodity, then it's not going to be that important. But sometimes it's very, very important. And then you've got the harvests, so corn, wheat, coffee, sugar, all those kind of things, which obviously are going to affect the value of that commodity. And also freak weather, for example, if it takes out some crops or some sort of attack from some sort of pest, whatever that may be. Again, news, key events that are going to affect the market. And then you've got breaking news, which can affect any of these. So unexpected world-changing news, unexpected things like we had Brexit for the UK, some sort of terrorist event. Although I dare say that the markets are getting a little bit desensitized to it. If you go back and look at the terrorist events from 9/11, then we had 7/7 in London, the Madrid bombings, and going all the way down on all the scales, the market tends to move much less than it did from that first horrendous attack. So, but anyway, if there's terrorism, if there's something that is key, then it's going to affect the market. Deaths, key statesman deaths, presidential deaths, world leader deaths, that kind of thing. Technology breakthroughs, contracts. This is more specific to stocks. As they get a contract, or they suddenly get FDA approval or something like that. Just some unexpected news that's coming out. Again, that could be macro or it could be based on micro. So these are the sort of things that move the markets. So just looking around the world, we've got what actually moves when we get this news. So global news flow. News affects all the markets, specifically one in focus. So if you've got news coming in Europe, what is it going to affect? Obviously, it's going to affect your FTSE, your UK. It's going to affect your DAX. It's going to affect your CAC, SMI, which is the Swiss, and then it's going to affect your currencies like euro, pound, Swiss franc, and those kind of things, and Polish zloty, and all those other smaller currencies. And then moving over to the Americas, we've got Dow, S&P 500, Nasdaq, obviously the dollar, gold, kind of oil, Canadian dollar, and then you've got commodity-based currencies which are relevant to the commodities. That's a little bit more in depth, but this is what happens when you get some sort of news flow coming out of America, the economy of America. That is going to affect all of those in that American box. And then over to Asia and Australia. Nikkei, Hang Seng, Yen, Aussie dollar, ASX, SSE, all those kind of things are affected by that. Obviously, they are all interlinked, but ultimately they're the ones that are going to be affected the most when you've got news coming out of those regions. So keep an eye out for that. Manage the risk when you're trading. Be very cautious about holding stuff over these events, because generally they're a binary event. They're either going to go up or it's going to go down, and sometimes you're going to get that gap risk, so you're not going to get stopped out at the level you want. So being aware of that, and being aware that it could affect the market. Is there a trading opportunity after it because of the reprice scenario, and also being aware of the risk management going through that actual event. Okay guys, take care. Back with another video soon.